breach of fiduciary duty, allegations of mismanagement, shareholder disputes. Not the topics you want to discuss at your next board meeting. Hi, I'm John, Chief Insurance Officer at Vouch, and I'm going to explain the basics of Directors and Officers Insurance, or D&O for short. D&O Insurance is designed to help protect your startup and the personal assets of your founders, officers, and board members if you're sued over decisions made on your startup's behalf. You might be thinking, how can I lose my personal assets when I make a mistake at work? Doesn't the corporate structure shield the operators from liability? The answer is usually. But the fact is that in some cases, shareholders, regulators, and other claimants have standing to bring suit against executives and hold them personally liable. How about a couple real-world examples? Here in Silicon Valley, we have a culture of big visionary fundraising pitches, but startups can go too far and fail to disclose material problems with the business. When that happens and the company struggles to hit its milestones, investors can sue for misrepresentation. Or imagine a startup that hires a seasoned vice president from a larger competitor. This executive brings a wealth of industry knowledge and best practices, but also exposure to sensitive intellectual property. The former employer sues for infringement and theft of IP. The cost of damages from these types of claims can range from six figures to the tens of millions. D&O Insurance can pay the cost of legal fees, settlements, and judgments, and thus protect the personal assets of the individuals who could be at risk. Because Vouch's D&O is designed especially for startups, it includes two coverages you won't typically find with legacy insurers. The first is cap table dispute coverage. This protection can cover the costs of defense if someone were to take legal action against your company's ownership percentages or equity distributions. This is common in founder breakups or early employee disputes, regardless of what your agreements say. The second unique protection Vouch offers is intellectual property protection. This can cover the costs of defense if someone sues your company for patents or trade secret infringement. Traditional D&O policies provide no coverage for IP suits brought against the company. When considering when to buy D&O coverage, oftentimes the decision will be made for you. Many investors and board members simply won't work with you unless D&O is in place because they need to reduce their liability. We recommend D&O insurance for any startup that is raising capital, appointing new board members, or entering into highly litigious regulated industries. Practically speaking, 90% of startups buy D&O at Series A. We recommend limits based on your stage and whether you're in a regulated vertical. Fintech companies, for instance, tend to need more protection. To see your recommended limits, simply click Get Coverage Recommendation. If something goes wrong and you need to make a claim, contact us and we will get you through it. Vouch is here to help manage the process as well as pay the bill. If you have any questions, get in touch with an insurance advisor. We can talk about your startup and the potential need for this coverage or any other we offer.